Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening as we're now on Wednesday, the 9th of November, 2022. So the market gave you its verdict. The verdict is the Republicans did a terrible job. The polls were terribly wrong. We don't know who's going to control the Senate at this point in time. That's got a ways to go. That's my crazy cat running through here. We don't know who's going to control the Senate. May not know until the Herschel Walker race is decided in December, because that's headed to a runoff. And the control of the House certainly looks like it will go to the Republicans by the narrowest of margins. What does it mean? The market told you what it means. It means more gridlock. It means that President Biden probably decides to run again, because he had to be doing a jig in the White House. He had to be dancing up and down. The odds were really against the Democrats. Everything, be it, it was inflation on one side, the handling of events, not getting things done. They showed up pretty well. I think the Republicans have to look at themselves and say they squeaked out a win in the House, but by what? Now, what's that going to mean for President Trump? That's the other thing. Well, I think he's the big loser. I think that his handpicked people didn't do the job. He certainly didn't offer the Trump crush to the Democrats. And if his ego wasn't as large as it is, maybe he could become a kingmaker, which I think would be a good role for him, throw his weight behind DeSantis. If DeSantis and he got together and can come to agreement on terms of things, that could be an interesting play, because Ron DeSantis was the star of the Republican Party. Rest of the unknown votes, well, they'll come in. Governorship still at a battle. That's how U.S. politics work now. Everything could be contested, and mail-in votes change everything. You got to still be counting in tight races. That can go on for days. But what the market said is it didn't like it. It's that simple. Now, we get the second shoe that I talked about last night, and that's the CPI, and I said it's going to take on all the importance. The estimate is that you're going to see a slight drop, maybe to 7.9% on the headline CPI number and about 6.5% on the core CPI. That's not much of a drop on the core CPI. So I think that the market will look at that. If the numbers come in higher than that, just look at it as bearish. If it comes in good and lower than that, that could be a little friendly, the markets, because the markets are doing one thing now. They're looking over the horizon like this, and they're going, when is the Fed going to have to stop raising rates? That's all they want to know. And now that we've got the election out of the way, the answer is pretty simple. When the core starts really dropping down. A 1/10 of a point drop is not a real drop down. Please understand that. But we have two CPIs before the next meeting. So that's how you look at it. Why are there two? Because you get this one, and when the next Fed meeting is the 13th, I believe, of December, you'll have the other CPI in front of that and another jobs report. So there's one more set of data. Let's get through it. But view this report. Like I just said, I've given you what I think are the pivot numbers. Now, what LIT is doing, and this is one of those lithium ETFs that I was looking at, is it's filled the gap. If you come back on the chart just a day here, and that's what I want to do, you had a gap in the chart here. Charts don't like gaps. Now, this could have been a very interesting bullish gap. If you would have left this down here and just keep moving higher, that'd be a very powerful bullish play. I mean, super powerful. And instead, as a chartist, it's filling in the gap. So just a normal rally right now. The market is in an uptrend. It's got higher high, but it's got a lower low. So did I say uptrend? That's not right. It's got no trend. It had a vertical price rise that's seeing a correction that might end up right back here at the 18-day average of closes. When the market was up last night, I told you, the traders, there are so many things built into algorithm trading. And that's what's nice about algorithm trading, is you can put all your rules in there and have the algorithm execute it. What's not nice is it's not hands-on, but in the theory it is, because it's your rules that you put in. In any case, I think that they look at the first time that you hit a key moving average, certainly the 200-day and the 100. You haven't been to them since back in September. should offer some resistance. And that's exactly what it did, throwing the market back a bit. And if we put on the Bollinger Band, if you step back with this market right here, let me do that, you can see that the market had a couple of days here, several days up and over that band. I gave you last night and I said you have a 2% chance of staying up today over the Bollinger Band. So that's what I was looking for. And as you can see, the market fell back in it. So it's acting as it should from my point of view. Plus it was overbought. Okay, let it develop whatever trend it's going to. Meta, up, and tomorrow's the key day. I'm in the bear camp until the market gets a settlement on the slow stochastic over 21. Don't close over 21. Nice to have the rally, but you can fall back and challenge these lows again. You're at a crucial spot in the market right now. When we visit Apple, you can see that Apple's got lower highs, lower lows, and coming back down for those lows. Apple's got nothing but problems at this point. Their goods for Christmas, they're being cut. I heard that now the Apple iPods, that the manufacturer that makes them has been told they're not manufacturing them anymore. Their stock just cratered. Parts are being given elsewhere, but can they get anything done with the COVID lockdowns that you're getting in China? It's highly doubtful. Until China lifts those, it's very hard. Disney. This stock's doing terrible. Since the new chairman came in to run this, I'm not impressed at all. This is a real breakdown for a great company, and it's an ugly looking chart. Don't be a bottom picker. XLF. So what we have here is lower highs. We've got a lower low, then we came up here and we're ending up making a higher high, lower low pattern. It's not good. What about embedding? You might get that done. So if I take a look, both numbers today were over 80. Yesterday, both numbers were over 80, and the day before they were both over 80. So it's embedded. If the market is good tomorrow, the market has to hold breaks. I think the pros will step in after and this is a big after they see the CPI number, which will come out before the markets reopen in the morning, and they'll make a judgment on this. Is the whole market down or up? If the whole market is up off the CPI, I contend this market probably gets bids tomorrow. If the whole market is down, they'll look at this and say, the market probably is going to lose the embedded reading right on the opening. You got to be patient tomorrow and look and do that. In XLI, you can see you've got higher lows, higher highs. This is one of the few standouts here. This looks really good. This is still a very bullish chart. It's embedded. I do think the pros will buy the breaks in this market, and I'll be looking at the 94.38, the 200-day average. Is that going to be able to be a support area? In theory, it was the first resistance zone, and when it came back, it went back through it and just stayed over it. That means what was resistance, in theory, should be support. As usual, if you lose an embedded reading, you come away because the market can go back to the 18-day average at that point. In XSD, we got up to the combination that I often view as lethal. The first challenge when you get a key moving average and the Bollinger Band together is often a good resistance zone. Does it have to be? No. When it comes together above the market, it's an area that I teach that's where traders take money off the table. And this was the first challenge of it. Now, I think they took some money off the table here. Then it fell back to my neutral number. It wasn't an uptrend. You had a lower low, higher high pattern. It came back there, and it's still a resistance zone. The home builders, as I said, confusing as can be why they can do well. But you throw out a sell signal on the close today. So I think the pros are going to go short this market literally right here. I think they'll put a stop right over the 57.93 level, and I think they'll hone in to see if they can get back to the lower Bollinger Band. If the market can reverse course and get over that 57.93, I will scratch my head, but I will get in the bull camp, okay? Looking for a test up there. I think the market's giving you a game plan. I am surprised. XLE, I didn't expect this market to knock me out of my bullishness, and it did. The market came all the way down, lost it. I had gotten bullish this market, I don't mind telling you, at 88.95 and turned it into a 40-cent loser in the market. I was hoping it would go higher. It was acting great until today. And if you take a look, you can see this. This market had everything going. It had its bullish embedded reading, everything up there. It wasn't hitting the window envelope quite yet, and today it lost that. Okay, 40-cent losses, not the end of the earth, right? In GLD, now this is a zone where I'd be very careful. The market has come up because, in large part, the dollar has fallen. The CPI tomorrow is the determining factor as to the next wave for the dollar. I think it carries the day completely. So I'm on pins and needles waiting to see what that does. But when you go up and you hit, for the first time, the 100-day average, and you're already over the Bollinger Band, I think the pros are going bye-bye. I'll take my money, put it in my pocket. Let's see what that does and what we do. Is the market a fresh buy over the Bollinger Band anyways? No. Is it buy when it's overbought? No. Same in silver yesterday. You got up to the 200-day average, and you've been riding the upper Bollinger Band. No, I think the pros have walked away from both of these. I think they're prepared to come in if they embed in the slow stochastic, but not at these current levels. Copper, what did I tell you? It was just a question of when it decided to move to the right-hand side. You don't stay over the upper Bollinger Band more than, typically speaking, 5 days in a row. And this market was having its problem right through there. Okay, doesn't want to do it. That's fine. TLT, you got to be on the neutral side going into the CPI number tomorrow. You know the Fed's going to be honing in on this. We'll hear from Fed speakers right afterwards. There's two of them tomorrow. They're going to be talking. I'm sure they'll be asking questions about it, and we'll be paying attention. Resistance back at 95.59. You came out of the downtrend. You have the swing line up, but the bias down and momentum flat in the market. We then come to the dollar index. Well, I think yesterday is where the pros covered, not today. You hit the Bollinger Band, you're oversold. That's where I think they came out of that. And I think they flip-flopped out of the FXE. You tell me you hit the 100-day average in the upper band. You set your rules when you trade, and you try to come up with a game plan that makes sense. And that's what I try to give my people every single morning. In the morning, and when I say morning, I'm talking rather early. Let's see if I can get this to open up for us. I'm not able to. In the mornings for the Spider ETF, I start recording about 9:10 in the morning. Why not 8:30 when the cash market's open, the formal exchange openings? I want the algorithm money to get into the market, and I want to get the reports out of the way. Typically, U.S. reports, the most common times they're released are 7:30 a.m., 8:30 a.m., and 9 o'clock. And I want to get that into the market, and then I'm already got my charts open because it's been open since 8:30. I do my update, and I start recording the game plan for the day. The idea there is you come in, you see what I'm going through on 40 some odd charts, what I'm saying about the market. I am going to be wrong, and I'm going to be right, okay? Nobody walks on water. At the end of the day, we're reading tea leaves, right? We're trying to pick up trends. This is not about fundamentals. This is about chart action based on the fundamentals. Very big difference between the two, and it's why I like these reports to get out of the way in the morning. They may change the market outlook. What if you get a soft CPI tomorrow? It's going to change the outlook. What if you get a strong one? It's going to change the outlook. We keep a close eye on it, then you come up with it. And I'll cover the daily charts, often the weekly charts. Weekends are weekly charts. So on the weekend, be it Friday night or Saturday, I will give you the bigger play off the weekly charts. And during the week, it's typically the daily charts. I think you'll find a lot of action in it. How do you get to see this and work with it? It's simple. Go to our website under the keyword research. And if not, you can just take your cursor, move up here. It'll be right up there for you. Click it, it'll take you right to the area. And that's how you do it. I'm Ira Epstein. You have a good day. It's going to be interesting. As I said, it's the other part of the two-step dance. That's tomorrow. And then we get a breather up until the next set of reports, in my opinion, in December. So be interesting trading from this point on. You have a good day.